Oh, man.
Brilliant. If only we'd gone live a mere 5 seconds earlier, you would all be laughing like I was about. But that shall remain private. We are live. It's Pips Like a Pro. It's Monday. It's the day that we talk all things FX. How are you, everyone? My name's Gavin. I'm the host of the show. And the man to my side is the man, the myth, the legend, Mr. Andy Demi, our resident professional trader of over 18 years. How are you, good sir? What did you get up to this weekend? It's your back.
I'm good, mate. I'm good. Not a lot, but actually it was a nice weekend. Spent some time with the kids. We went out a little bit, barbecue, watched some football. Liverpool won again, that kind of thing. So I'm always happy when we win. So yeah, no, it was nice. Nice, not too much work. I did a little bit of analysis to set my week up, but not too much. So I had a bit of a break, and
Awesome.
Feeling good today. And I went to the gym as well. That was good. So believe it or not, it sounds really crazy, but I'm actually signed up to 2 gyms now.
That's just too fancy, mate. That is
people will say, what a waste of money. But I have to, because I want a nice gym. But the problem is that the hours don't really suit a dad, where kids are not going to sleep and that kind of stuff. So by the time they've gone to sleep, if I don't do it in the day, I don't get to go, because
Really?
it shuts at. Yeah, because it shuts at 10:30, and I don't like to rush my session. I like to train properly.
Yeah.
So I've re-signed up to my 24-hour gym as well. So when I don't get to go there, I just go here any crazy time that I wake up, or any crazy time in the night. So if it's midnight and I want to train, I've got my gym there.
But how often in the week? How many times a week will you say, "Oh, it's midnight, it's 1 a.m. I want to go to the gym"? How many times are you going to say?
More than what you'd ever believe, to be honest. More than what you'd ever believe, yeah. No, I need to train. It's part of my routine. So I can't have excuses that, my gym's shutting. So it's just kind of like whatever time it is, I'll go. Like it'll be more likely like 10:30, I'll go and train. Or I might be up at 5 a.m. I'll be like, yep, I'll go and train now before everybody's awake. Whereas my other gym doesn't open until 6:30. And that one,
they're probably really expensive as well, aren't they?
The expensive one is the one that's got the least amount of hours.
It's so strange, isn't it? So just tuning into the guys that are tuning in to us, I'm on a treadmill as I watch. Trying to get it all in these days is tough. It's also tough trying to work out who you are, mysterious person, because you are being very naughty. You have not logged in to the StreamYard link that is provided every week. Please do so immediately. Otherwise, your treadmill, maybe it might malfunction. I'm not jinxing it. I'm just saying. So if you fall off, it's not our liability. But yes, thanks a lot for everybody for tuning in. But actually, you do need to log in to the StreamYard link like Zach does. He was getting excited because he thought he was second in our comments. Then he was like, oh, no, actually, I'm third. And maybe he's even dropped down to fourth. Who knows? Also, Terence is in the house today. Thank you very much for tuning in. We are doing very well, good sir. Jason, good day, guys. He is tuning in from Australia.
Oh, I like that. You see Australian, like, good day.
It might be a little bit racist of me for assuming, but I'm pretty sure that Jason's this side of the pond, like me. And the first comment of the week and of this live show is another naughty step person. Hi, all. No idea who you are, but congratulations for doing the first comment of the show. So, look, I want to dive straight into the content because we've got a lot to cover, as usual. No time for music either, because we're going straight in, guys. That's it.
What?
So
no music? I can't get going without music.
We're going straight in. We are going knee deep. We're going straight in. And today's topic that we want to talk about, well, mate, look, we're going to be talking about all the major news in the world of FX. We're going to be breaking down a live trading setup. I want to make sure we give that enough time to marinate and let all the juices and the flavors kind of overflow for everyone. But the first thing that we want to talk about is currency pairs and the relationship or the correlation, if you want to use a fancy word or a fancy term, and how they interact with each other. Because you hear people talking about commodity pairs like Aussie dollar, Kiwi dollar. You hear people talking about consumer pairs or consumer currency, should I say, like the US dollar or the yen. Now, I'm sure I'm not the only person where you think, right, I've done my trade setup, I've done my analysis, you've got a really good setup, low risk, high probability, lots of confluences, lots of walls, but then maybe nothing happens, or maybe it doesn't happen for a while. And it seems to me that we need to understand, and you always allude to it in the news, but I just want to spend some time unpacking it, of the relationship and maybe some of the relationship of the pairs that we're not maybe aware of just yet.
Yeah, I mean, firstly, correlations change. That's important. So you need to kind of keep track of what's being correlated with what. And if you kind of look online, most news sites have got a correlation matrix, so you'll be able to kind of pair them up. So if you Google correlation matrix, you'll find lots of them for currencies, and then you can kind of see what is moving together and what right now and what is not. Yes, there are some really traditional ones, like the Canadian dollar with oil, because they're big exporters of oil, and as long as that is the case, then there always will be that correlation. And like you said, the commodities like Australia and New Zealand, especially Australia, with gold, copper, these kind of things. Now, for those that are trading FX, that's not going to make a huge amount of difference, but it can. If you want to take it to another level, you can. I mean, you can analyze the commodities, and you can kind of make an inference as to how a currency might actually be affected by it. So obviously, if you're a big exporter of oil, it helps if oil price is going up, because you're making more profits, with all things being equal. And the same thing with other commodities. So if you're a big exporter of a certain commodity, it will help if the commodity is likely to go up. But in terms of like your FX, I think the biggest thing that people kind of miss is when you're trading and you have no idea that pairs are correlated, you end up taking on way more risk than you actually ever anticipated. And that's part of, so if you've ever been in that position where, you get a stop out and you actually have three positions and they all get stopped out. And in your head, you're like, well, these are three different positions. So let's say you say, like, I'm only doing 1% on each. But if the correlation is like 90%, it basically means that you're pretty much doing 3% on the trade idea, not 1%. So that's something to bear in mind. Now, I did a video, it wasn't with FX, but it's the same idea the other day, about how to be potentially market neutral. Now that kind of idea there was where I was long one and then short the other, because one was overpriced and one was underpriced, and actually both of them made money, which was great. But you can kind of do something similar with correlation by buying, for example, two currencies that don't move together, if it makes sense. So what I mean by that is, like, you still want to find a setup. Like, you don't just want to kind of, because then you're trading something completely new. But if you can find a setup where you've got two opposing correlations, it will help reduce your risk. So if you get the first one wrong, like, there's a good chance that the other one will be right, but both can still make money. So, because like I said, correlations don't stay indefinitely. They change over time. And for example, like, there was always this negative correlation between gold and dollar. So gold goes up, dollar goes down, dollar goes up, gold goes down. That's been around for years, but that is less and less prominent. Do you know why?
Nope.
Well, gold was seen as the safe haven, but we're kind of moving away a little bit from that now. And money's going.
Darn C word, right? The darn C word.
Well, the B word, even the B word. Like institutional money is now flowing more to Bitcoin than it is to gold. Like in terms of assets going in. So then these correlations can change. And that's the thing that you have to, so the new correlations form. So the thing for you to do is just to be aware of what is moving together right now and what is not, I guess. And when you take a position, you have to have some rules around that to make sure that you're not overly exposed to one idea. Because you might as well say, well, I'm doing 3% on the one idea, like, and choose your favorite one. It's almost the same thing. And then at least then you're focused, right? Like you can manage that trade properly rather than having 3 trades that actually are pretty much the same thing. And you've got 3 things to look at and 3 things to manage. So
it's a shame that there can't be like an all size fits one, but I guess because everything's so dynamic and especially in the current landscape economically around the world, things are just changing it seems like week on week, month on month, right? So I guess there can never be that.
Yeah, no, there are historical ones, and like I said, like there's ones that will be around, as long as Canada's an exporter of oil, that correlation will be there. But things don't last forever. Things change. So with different renewable resources around, like, you know, oil may not be the future, right? There's so many different things now. But the point is just for your trading, that's the thing that really we're talking about here, how it affects you. Yes, it's good. I don't think it's necessary to go that extra mile to start studying the commodities of each country that you're trading, because then, like, I know New Zealand is more on the dairy side, so then you're going to start analyzing. I just don't think there's enough of an edge there. So, I mean, you can, but you've got to remember your time is valuable. And so you've got to really think about how impactful. So if you want to do an hour a day, you're not going to be doing that. It doesn't make any sense. But the one thing that you can do, which takes 10 seconds, is just know the correlation of the 2 pairs or 3 pairs that you're looking to buy or sell. So that at least you have an idea, okay, these move together, maybe I should only take 2. So anything more than 0.5, for example, correlation, you may want to consider that as too correlated, and you should only trade maybe 2 if you at most at the same time, if you're doing 2%, or you split your risk up. So you say a maximum of 2% exposure to correlated assets of more than 0.5 to 1 would be a good kind of rule, so that you're not overly exposed to an idea.
Cool. So if anybody's got any questions around that, just let us know. And if you are just tuning in, then you've just missed us break down about how different relationships between currency pairs work, and obviously the correlation between currencies and how best to kind of use that within your trading plan. We're just about to jump into the big FX news for the week. Just got to do a few shout outs. So Anita is tuning in live. Also, we have got Michael Bruce. A big shout out to Brucey as well. So let's jump into the news and see what's going on in the world of FX this week. Remember, we're looking just for the high impact stuff. And then, obviously you know that. I'm just saying for everyone else. We're looking for the high impact stuff. And from there, Mr. Demi will be, looking for a trade setup from that data that we go ahead and find in the news. So what's the news looking like this week, my friend?
So I've filtered out here the high impact ones, and it is normally the last week isn't too volatile, the last week of the month, but we'll have a look and see. So we've got German PMI coming out, manufacturing PMI today. It came out this morning. That doesn't really have a big impact normally anyway. You can see the numbers there. And then tomorrow, Wednesdays, is quiet, nothing of high impact news. And then we have preliminary GDP, could have some movement on sterling. And we have, on Friday there could be some movement. Fed Chair Powell speaking, but it feels like a quiet week, and that's pretty typical towards the end of the month. It feels like a quiet week at the moment. So, you may, we'll certainly have a look and see what there might be available, but it doesn't look like there's anything there that's going to have a big, it's going to create a lot of volatility. We also have a bank holiday on Monday. So probably out of all the pairs, I'd probably say sterling is could have some movement because it's a bank holiday. Potentially there could be a bit more activity this week. Certainly on Friday, there could be some positions closed, and it looks like possibly Friday might have a bit of volatility, but I think it's going to be potentially a quiet one unless something unexpected happens. And really, in terms of high impact, the US has really the only piece of data, really, Fed Chair Powell speaking and the preliminary GDP on Thursday towards the end of the week. But probably Monday, Tuesday, Wednesday will be good for potentially short-term trading. Maybe DTR fades could be a good idea, that kind of thing. But we'll certainly have a look when that time is, when we're ready for that.
Cool. So look, just so that we can start to get some more downloads from your mind as a professional trader, tell us what are some of the things that are coming up. So you've kind of just said it there, but just to clarify, like what sort of ideas for pairs would you be looking at from this data right here? And also, sorry, just to add on to that, is the third week of every month typically quiet like this? Because this is the quietest that we've seen the news over the last 3 weeks, right?
Yeah, final week of the month is typically quiet. I think in general the markets are quieter in the summers anyway. But yes, in the first week is normally very, very active. But yeah, I mean, typically yes, but it can vary. I mean, you're not going to say I'm going to take the third week off. It just doesn't quite work like that. So, or the final week off. So yes, there'll be some times where you do have a lot more data, but yes, I mean the first week of the month is typically the busiest. We have most of the time it's non-farm payrolls, and normally the middle of the month is when you have the Fed's first speech, where you get a bit more of an indication of the future interest rate movements. But yeah, you still need to have a look and see what's going out. And of course, there's always the unexpected things as well. But in terms of like this, there's not, if I'm being honest, like the way I would approach this would be, I'd be looking for day trades against the dollar. I'd kind of scan through my majors. So cable, Aussie dollar, Kiwi dollar, dollar CAD, and I'd just set up some short-term trades to take advantage of the probably likely low volatility of the week. And typically I'd be looking for kind of fake outs, DTR fades, range trades, that type of thing. If the charts show me that. Obviously this is just off the news, so the charts have to do the talking basically. And yeah, that's kind of that would be what I'd do. So I'm happy to have a look, and if you want to do that now.
So based off that, then the ones that you've mentioned, let's go into one of them. Let's follow this through as a process. So you've mentioned a couple there. So what are you what one kind of jumps out to you the most, and we can start there.
Well, I will I'll just have a quick look at what's going on, and so we can do potentially we can do the euro, we can do Aussie. I'm just going to have a little look and see what is showing here. So let's zoom in to the euro to start us off, and let me zoom into the Aussie. So I've got these up. Yeah, it looks similar, and just going to bring in cable as well, and we'll stick with these three. I'm just going to have a look to see which one looks the best. Yeah, they all look quite similar, just a retracement in the dollar, so dollar weakness off the back of this move. So we can, I think I'm going to choose to have a look a bit deeper on the euro. It's been a little while to cover the euro, so let's have a little look at the euro. So we'll go to the daily chart, and we'll start here. Okay, so I always like to just kind of get a feel for what's going on the bigger time frame. It's always important no matter what's going on. So we have, yeah, I mean, you can see, obviously we've got this bigger picture in mind, which is important, but you can kind of see that the main focus here is on what's going on right now. So you've kind of got this squeezing price action, which, yeah, I mean, looking at that, you're kind of thinking right now that, you know, you'll probably find some resistance up here. So like very, very short term, you could be looking for a little, hello? Why can I hear noise?
It's not me. Have you got ghosts in your house?
Maybe. They're more than welcome to be here. So, yeah, so you can see right now that until you break. Now, I can't see what's going to create this break right now, up or down. So you've got this kind of support and you've got this resistance, and they're converging. And normally that's either like, okay, that would be like a bullish price action, but then we've been, you know, you're kind of looking at that as a double top. So you'd kind of want to either break through here, or, you know, the market gets fast and we start to really go down. I can't see what's going to create that this week, but of course it can. So just with that in mind, we can go and have a look at short-term potential trade ideas.
Awesome. Just before you go any further, I've got a question from Jason, and someone else is also asking about timeframes. So Jason's saying correlation seems to change over timeframes. What time frame do you generally look at?
So I would be looking at the daily time frame, because even, I mean, if you're, because short term, yes, it will change, but you're kind of, you kind of want to take advantage of that in a way. So if you've kind of got an idea for you, so let's say you've got a very, very correlated pair, but today they're not correlated. You could do that market neutral strategy that I referred to, that the pairs trade. So it's like, they've moved away today, but in general they're correlated. So if you buy one and sell the other, so maybe like a news event has created that kind of spike in one of the currencies, and it's overpriced now. It's like overshot. Maybe it's at the top of its daily trading range. You could sell that currency and then buy the other one. Again, you should do it as a proper setup, but in essence, like, yeah, I would, that for the longer term, it's definitely the daily chart that I would be more focused on when taking the trade. If you're going to do it the way I'm explaining, it's got to be a strategy in itself, but you're buying one and selling the other. So that's why it kind of works. And with the idea that actually they normally move together, but this one's overpriced, so it's a nice hedge. Whereas if you are buying two currency pairs, you definitely want to look at the daily chart and say, well, I'm buying, they generally move together. I'm looking for a longer term move. The daily is what you want to focus on.
Cool. Let's crack on.
Okay, so let's add in a couple of things. So, we want to focus on what we've seen, and what we've seen is like price action getting squeezed. So there's a couple of things that I want to know. Before we add in any indicators in, I'm just going to do a couple of things here. So let's see what we have in terms of connecting this price action here. So again, it's kind of like, you can see there, it's just squeezing. And I'm just going to draw, we're going to do, in fact, let's do it properly. One sec. So I'm just going to put in my trend lines. I haven't got my license on this one, so I'll do it manually. Okay, so we're just going to do.
Sorry, Andy, if you're new to the group, just while you're doing that, normally Andy would have this done at a click of a button with one of his pro trading indicators, but he's having to do it manually because he hasn't got his license on this one. So
yeah, so I think it's a new account. That's why I was like, I haven't created one. That's interesting. That is very interesting. So we're kind of approaching this, yeah. So that's quite a key zone now for the euro dollar. And yeah, that's obviously a bearish zone here. And that kind of increase there where it's getting squeezed is also quite bearish. So unless we break through here, if we break through here, then we could be heading a little bit higher. Let's also add in right now we can't add the daily trading range in. That's a bit frustrating. Tell you what I'm going to do. I've got a solution. I have a solution right now. So I will add in.
Brucey's saying, pay the fee, Mr. Demi. Pay the fee to yourself.
It's too expensive, mate. Let me do the. Okay, that's cool. We can't really see it properly, so I'm gonna. So let's make it a bit thicker.
So in case you didn't know, anybody that does have the trading indicator package that Andy's designed, you can get them on TradingView as well, correct?
Yes, you can. So yeah, this is a interesting position on the hourly chart. So we've hit the top end of the daily trading range. You can see that it's also the 200 EMA on the hourly. Let's see how effective that is. So you can see it's reacted a little bit in the past. So yeah, I mean, this is a kind of thing here where you could potentially take a short, but it's very, very short term. I would probably, I mean, you'd have to be trading off. Look, it's just hit the Fibonacci level as well. So we should be in is the reality. Like if you're going to short this, like that's really where you want to be in, exactly there. So you could get a little pullback into that, and then you could literally take a short-term trade, possibly back down to this 50 EMA. So that's kind of, in this scenario of what we're seeing on the higher time frames, that's the kind of thing that would make sense right now. So you'd look to potentially, ideally, you'd be in now because you've hit the DTR, you've hit the 200 EMA, you've hit the Fibonacci D, and you've hit an old support that becomes resistance. But let's say you're not in it, you have a potential second chance if it goes back and tests. And like I said, I mean, I'd probably go for that as a very short-term target, back towards the 50 EMA and then out. So I would personally be looking at a short-term trade like that if I was going to take this now. Let's say you don't get that trade, so that would take you down to about 117.05, right? So let's say you miss that, or you don't take it today. Then you end up looking at the market around here. So you're basically going for that. You can see that's the look how reactive this area is, right? You want to kind of be out there. Now, let's say you don't take it and you look again and you think, okay, well, I'll get it tomorrow. No rush. So what you could do is you want to start preparing for that, right? So there's a couple of ways you can do it. You can either look for a bounce back onto this line and sell it there with a stop there, and then look for it to break down. Or as for the conservative people, you would, let me finish what I'm saying. So for the conservative people, you let this market break that structure, and then you get a pullback and you short it that way. You can also, because this is kind of interpretation, we've got that squeezing price action. It can also become like a little mini up channel. So I would actually add that there as well. Maybe make it like yellow. And because that's probably going to be something we need to break. So don't be surprised. You can copy this picture. Don't be surprised at all to see, if this market kind of got here, it will probably bounce, it will probably break, And don't be surprised if you kind of get that pullback into that and then it goes down. That's pretty normal. It's so the most important thing here, guys, is one, the context. Market's getting squeezed, not a lot of news going on. Let's find short-term trade ideas. Let's not try and get where the euro is going to go in the next few days. Let's try and get the now. That's what makes sense right now. It's not clear that we're going up or we're going down. So you have to trade what you see. And then the second most important thing is don't jump in. Like, wait for your price. Like, if you don't get the price at the top, you're like, oh man, I should have got it. And you just get in now. It doesn't make any sense from a numbers point of view. Like, I've explained this so many times to people that if you don't get your prices and you just jump in, even if you make money on that one occasion, your numbers won't stack up. You have to make a certain amount of money for your numbers to stack up. And so you have to make sure if you're putting that risk on, get the right price, get the right setup. So, and maybe an argument for the other side might be, look, but surely it's better to sell here than it is to sell here. Well, yes, in terms of price, but I'd like to ask people, like, yes, in terms of price, it's obviously better to sell high. But what have you got more of down here? So if you miss this trade at the right price, what has this got here that this hasn't? Better what?
So guys, let's get a bit of interaction going. See if you've been paying attention. So who's going to be first up with the answer?
It begins with P.
We're playing Trading Hangman.
Yeah, I play it all the time. I'm sure somebody's going to say profit. It's not the right answer.
Going to need another vowel, please, Carol. Zach's first up. Well, actually, Con Plonker. Haven't heard that for a while. Thank you, mate. Good to have you here with us. Zach's the first one in with pullback. Question mark.
No, PR.
Okay, we're going to need a noun this time.
There you go. A badly drawn out O.
I thought it was a bagel. Julie's jumping in with price action.
No. Good effort, though. The answer is probability, guys. The answer is probability. So when you take a trade, so sometimes people wait for confirmation. Like people say to me, okay, so when it gets to my price, like here, I want confirmation. So what does that mean? It means that I might wait for a candle formation and then I'll sell it. So why do they wait for confirmation? What does it improve? Probability, right? It improves probability. But what happens is your reward to risk generally goes down. So your reward to risk goes down, your probability goes up. If you sell it here, your reward to risk is higher, but your probability, you could argue, is lower because you've had no other extra confirmation to say, yes, we're actually going down. So the main point I'm trying to say here is there's always different ways of getting into a trade. And the most important thing is, like, they need to have structure and they need to be well thought out, high probability trades that make sense, that give you an edge. And so you cannot just because you think something's going to happen, you can't just get in anywhere at random. Like, even if you're right, and I think this is really hard for people to understand. If you get this, it will click what I'm saying. Like, the numbers have to work. It's like, it's like, you know, the people that sell stuff in markets, and they're like, you know, they're buying it for 5, they want to sell it for 10, and obviously it's their time, they're spending money there, their cost to be there, and then somebody says to them, like, "Oh, go on, I'll give you 7," and they're like, "Yeah, all right, then I'll take it," but it's not going to add up enough at the end of the day. Like, you're not going to make enough money, and that's the point. It's like, yes, okay, great, I've made £2 on that execution, but overall, are you profitable? Like, and that's really what I'm referring to, and that's what you're trying to achieve. So yeah, hopefully that makes sense, guys. Does that make sense, everybody?
Mate, that was a good pro trade setup of the week this week. Really good to see alternate answers. So, like I said, the whole point is to show you the process. So we've spoken a little bit about correlation and the relationship between the currency pairs, and then we've gone into this week's news. Not a lot set up not a lot of news, period. But still, the mindset of a professional trader is, okay, well, it's quiet this week, so let's look for these certain setups. We've then gone in, analyzed a couple of top line pairs, and then we've broken in, and then we've gone in and given you a couple of potential options for low risk, high probability trades. And all of that was done within 15, 20 minutes.
Yeah, and one other thing that people have to understand is that you don't have to trade. Like, if that style doesn't suit you, or you don't want to be, because you're going to, realistically, if you're going to take that trade, you're going to be looking at your screens, because the room for error is small. So, well, if I took that trade, I would be managing it. Let's say I'd be looking at, I'd be kind of not continuously, but I'd be having a look. So even if I'm doing something else, I've got it available to me. The other style of trading, where you're catching bigger moves, really doesn't require you to be in front of your screen, and you're better off not being in front of your screen. That's my experience, kind of coaching so many people. Most people perform better swing trading whilst working or running a business than the ones that stare at the screens all day. That's been my experience over the last how many years I've been coaching. So just bear that in mind. You don't have to be in front of your screens, and you don't have to trade off these timeframes, but they can add up. And it's a great way to just build up your account. If you're doing this, if you have the time, and then slowly, then you can put it into longer term stuff.
Awesome. Well, look, that has been a great show, and we fitted it all in within 60 minutes. You've got time to go for a coffee or play with the kids. Everybody's got 15 minutes left of their lunch break, or can have 15 minutes to go. What's the weather like there? Is it sunny? Go to the park, have a little stroll around.
Mate, it's always cloudy here.
Mate, the missus and I, we did a massive bike ride on Saturday, and then yesterday went to the farmers market, and then went down to the pool to sunbathe by the pool. It's the first day that we've had coming out of the winter here where it's been warm enough to actually say, do you know what? Let's get our Speedos and bikinis on and go down to the pool, mate, and have a bit of a sun tanning session. So hopefully you guys get some sun. But the point is that we have done all of this within 45 minutes. And as you start building this into a process get your SOPs, your standing operating procedures into place, it's amazing how efficient you can be if you want to be. So that's kind of the moral of the story and the takeaway from the end of this. So hopefully you've enjoyed the show. Tomorrow, we are going to be back talking all things cryptos. It's starting to get quite interesting. Bitcoin is at another price point. Obviously, we're going to get Andy to rub his magic ball and see what Bitcoin's going to be doing in the next few hours.
I'm not going to be doing any such thing, mate.
You can make a lot of money rubbing stuff on webinars. That's all I'm going to say. If trading ever goes wrong,
don't assume I'm doing anything, mate, like that.
Let us see your hands, please. Let us see your hands. What a weird way to end the show, but hey ho, it's a good day. Thank you very much for joining us. Is there anything you want to say before we bounce?
No, I think like wherever you are in your journey, I think the most important thing is enjoy the process because it's the most fun bit. It's probably more fun than even when you're making money. The process, for me anyway. So I know like a lot of people are kind of pursuing this, looking. They maybe don't like their jobs, or they want to do something. They want to do this permanently, full time. And of course you can strive for it, but the most important thing is to really enjoy what you do and just keep developing, keep learning, keep asking questions. It's honestly the best. It's kind of like the best advice I can give you because it is the most fun bit. Once you start making money, you think that's all you wanted, and then you realize actually like the thing that I love is the learning and the developing. That's been my experience. So now it's just like, okay, great. I make money. We do certain things with it, but I actually love the developing part of it, the game of it, and that won't change. Doesn't matter how much money we make. So just keep doing what you're doing, guys.
Awesome. Well, look, we will be back tomorrow, same time, same place. Have a great day wherever you are watching in the world, whether you're live with us now or whether you're watching the replay. We love you all. And we'll be back tomorrow talking all things crypto with our live show, Crypto Like a Pro, with the man, the myth, the legend, Mr. Andy Demi. Right, guys, we are going to bounce. And
I hope you're giving me some music.
Of course, Boo Boo. Don't worry.
Okay, there you go. You disappointed me a bit, to be honest.